Please, thank you. Thank you. Thank you so much. Thank you. This side, of course. Please. Okay. Thank you. Yeah. Please. Thank you.
المفروض يطلع لنا اسهم واضح.
انت عم تنزل وزنك ونحن عم
معي اسمح لنا بصورة بليز. Thank you.
بعدين انت مشموس يعني. One more.
Students will eventually come. Oh, good. It's always good to have the students. That's the great.
Last year it was on the side. Sitting on the side. وين عاصم؟
عاصم طلع على
Please, استاذنا. Please, نعيد الصورة. Please. Thank you.
هذا أجلوه اليوم.
الجلسة بيعطي
Mr. محمد علي بيهم.
Please, sir.
He's the chief financial officer. How's he doing? Amar was with me in school. We were together in elementary school. So I've known him for over 55 years.
Nice man, Omar. Nice man.
يلا.
Okay, tomorrow.
لو سمحت.
Yeah. Well, except on airplane.
So ja, le mise voilà.
judgment. During the last years, Dr. Asim Safiuddin, the Rami Makhzoumi Endowed Chair in Corporate Governance, and a well-known expert in the area, has strived to bridge the gap between academia and the business community in our region.
Welcome everybody, and thank you for participating in OSB's corporate governance related activities. I reiterate thanks for the Makhzoumi family. OSB was a pioneer in establishing the first of a kind, the Rami Fouad Makhzoumi Chair in Corporate Governance at the Olayan School of Business at AUB, among the region's School of Business. The Chair's vision is to elevate governance education, awareness, and practice in the region and lift them to the international best practices. The Chair is devoted to the dissemination of governance, knowledge, and research by way of closely exposing leaders to solid evidence and tangible experiences of good and bad governance, thus unveiling the motives for governance adoption among regional companies. The Chair thus aims at putting the academic research and findings of extensive research to their best use by being carried through to practical application and implementation of governance among companies in the region. We are grateful for our sponsors today at Phoenicia Bank for their generosity for supporting our activities at OSB, including the roundtable discussion this afternoon with select few CEOs and compliance managers for supporting our excellence awards for graduates and more. The ever-growing complexity of banking operations along with their globalization and the inherent risks have fueled and continue to fuel an upsurge in regulations and compliance requirements across the globe. In light of the systematic risk that the world economies were exposed to due to the activities of financial institutions, common standards and regulations are being imposed on these institutions globally. These include, for instance, the Basel III requirements, the FATF anti-money laundering, combating terrorism recommendations, and preventing corruption and tax crimes, and the US FATCA law aiming at preventing tax evasion. The common purpose for these regulations is to promote integrity in the activities of global financial institutions, instill more effective procedures for risk management and control, and mitigate illicit financing in all its forms. They all underlie requirements for improvements in internal systems and controls and include reporting and transparency components. Therefore, they require changes and systems in operating models, processes, and procedures, as well as IT systems. They also require the creation of new functions or roles within the bank and the acquisition and nurturing of skills and capabilities through continuous training. Each of these items carries significant cost to the incorporating financial institution, but the cost of non-compliance, not limited to business failures, litigation, penalties, and sanctions, or reputational risks, may be higher. Therefore, it's not surprising to see banks around the globe reviving their strategies or crafting new ones to fit the new regulatory environment. The challenge for banks today is to balance between this regulatory compliance and the extra costs associated with such compliance in order to maintain the sustainability of their operations and their ability to generate reasonable or acceptable returns. For this purpose, it's essential for banks to adopt within the regulatory and compliance boundaries those systems and procedures that fit each bank's specific features while avoiding the incurrence of unnecessary cost and without underlaying the importance of creating a culture of integrity, compliance, risk, and governance from the top down. To help us better understand these complex regulatory issues, we are very honored today to have the president and the co-founder of the Financial Integrity Network, a strategic and technical advisory company focused on assisting key financial and jurisdictional stakeholders in combating and protecting against the full spectrum of illicit finance. Launched this year, FIN advises jurisdictional authorities, financial institutions, and vulnerable sectors, authorities, and industries in developing and implementing counter-illicit financing policies, requirements, and best practices. Prior to launching FIN, he assisted one of the world's largest banks in developing and implementing its enterprise-wide financial crimes compliance program in Latin America. He did this by serving as the bank's interim head of financial crimes compliance for Mexico and the Latin American region. For more than 10 years, he served as the inaugural director of the Office of Strategic Policy for Terrorist Financing and Financial Crimes, and a senior advisor at the U.S. Department of Treasury. As the director of this office, he led a team of strategic policy advisors in creating policies and initiatives to combat the full spectrum of illicit finance and kleptocracy flows. As a senior advisor, he assisted Treasury leadership in developing the U.S. government's post-9/11 strategy to combat terrorist financing. He also assisted senior leadership in creating and developing the Office of Terrorism and Financial Intelligence. He led the U.S. delegation to the Financial Action Task Force for 4 years, co-chaired the policy working group for the FATF for 6 years, and managed U.S. participation on various G7, G8, G20 illicit finance experts group from 2008 to 2013. Key accomplishments in these roles include assisting in the revision and adoption of the FATF global standards and assessment processes for future jurisdictional reviews under the FATF global network, facilitated the integration of counter-illicit finance into the broader financial reform agenda after 2008. Our guest speaker co-pioneered a graduate course on national security and international financial system as an adjunct associate professor at Georgetown University School of Foreign Service. He graduated with honors from Harvard University and got his master's in international relations from the Johns Hopkins School of Advanced International Studies and holds a Juris Doctor from Georgetown University. Without further ado, please join me in welcoming Mr. Chip Poncy.
Appreciate the invitation and your support for the public policy interests that your son represented. Thank you. Awesome. Thank you so much for orchestrating this event, for inviting me, and to Dr. Mohammed Basiri for introducing me to Lebanon. All of you for coming. The students, thank you for your interest. This is ultimately an issue that will be with us for generations, and I can assure you there is real job security in what we're going to be talking about. So this is an issue that would be beneficial to study in the interest of what you do when you get out of university and figure out how you're going to pay off your student loans. I want to start with a different biography. I appreciate the introduction from Asem. It's very generous, and he has introduced me now at a number of different conversations, events in Lebanon this week. The biography that I'm more interested in, and that I think is more interesting to you, is my introduction to Lebanon. So in 2001, after the terrorist attacks of 9/11, I, like most Americans, began to think about my ability to contribute to public service. What could I do to help? And I was very fortunate to have the opportunity to join the Treasury Department at a point when Treasury was asked to put together a strategy to combat terrorist financing. At the time, I was an attorney in New York City. I didn't study counterterrorism. I didn't study money laundering. I was a corporate attorney, a transactional attorney, working in financial markets, working for a couple of startup companies, and coming from a global law firm. I had the great fortune of being close friends and students with an incoming official at Treasury that was being asked to lead the terrorism financing strategy development. And so I got on a train and I went down to Treasury, and like most Americans, was interested in doing whatever I could to help. On my way down to the Treasury Department that morning, Monday morning, June 10th, 2002, I opened the New York Times. This is before we had BlackBerries and cell phones. I think everyone else had a cell phone, I didn't. And I'm looking at 40-point font a headline that describes the creation of the Department of Homeland Security. How many of you have heard of DHS? DHS, Department of Homeland Security. So the Department of Homeland Security in the United States has been tasked since 9/11 with more or less the Department of Interior type of responsibilities. Law enforcement, border security, those sorts of events, crisis response. And what's important about the creation of DHS to the story that we're going to talk about is that it stripped the Treasury Department of its enforcement mission. Up until that point, the Treasury Department of the United States was the oldest law enforcement office in the history of the country, which is not how you necessarily think of Treasury. When I thought of Treasury, I did not think of law enforcement. I thought about the economy, I thought about the financial system, I thought, like most Americans, about taxes, but I did not think about law enforcement. And the fact is that the law enforcement office at the Department of Treasury at the time of 9/11 was the largest accumulation of law enforcement assets that we had. It included the Customs Bureau, it included Secret Service, it included ATF, it included the Federal Law Enforcement Training Center, it included OFAC, FinCEN, the IRS Criminal Investigative Division, agencies about which there have been movies made, books written, etc. And that was all stripped out of Treasury, all the law enforcement facilities, through the creation of DHS. And so as I'm on that train on my way down to Washington, I'm asking myself, as I'm reading what DHS is being asked to do, this looks a lot like the job that I thought I was going to be contributing towards. Our national security, combating terrorism, coming up with financial strategies that can assist law enforcement in investigating and prosecuting financial crime. To make a long story short about that transition, it was a huge opportunity for Treasury to redefine its role in national security in the United States government. And so I was fortunate to be joining at a time where, in contributing to a terrorism financing strategy, we were also building a new model for financial authorities to contribute to global security. And it was a model that was predicated on two assumptions, two founding principles. The first was that financial information was becoming essential to understanding the gravest threats that we were facing, whether terrorism, proliferation, corruption, organized crime, drug trafficking, or any of the predicates to money laundering. Without financial information, we were increasingly challenged to effectively combat these threats. The second premise was that without financial action, we were increasingly challenged to disrupt the threats that were operating and relying on and exploiting our financial system. Those two founding principles, financial information, financial action, we did not think could be effectively managed outside of the Treasury Department. And the reason for that is it required a partnership and understanding with the financial system itself, with the banking community, with the capital markets, with the insurance industry, with the money service businesses, exchange houses, money transmitters, the entire financial system. That is where the financial information is. That is where we intercept, where we disrupt, where we freeze, where we seize, where we confiscate assets belonging to threats that we're in the business of identifying and combating. Without the financial system, there is no financial information, and there are no financial actions. This is a pretty simple premise when you think about it. And that mission, when you look at the past 13 years, has been incredibly successful from a U.S. perspective in bringing the world around a notion of collective security. When you look at the United Nations Security Council resolutions that have been adopted in the face of crises ranging from proliferation to terrorism, to organized crime, to drug trafficking, these are threats that are increasingly recognized as global in nature and then increasingly require a financial response. So for those of you that are studying the evolution of the Security Council and Chapter 7 resolutions, what you'll notice is that over the past 13 years, there has been an expansion and an increasing sophistication of financial measures as part of the global response to any threat that we are facing. So there's real buy-in to this mission at the UN level. There's buy-in at the financial level. The G20, the G7, the G8. G8 is a bracketed issue these days, as you're probably reading about. The Financial Action Task Force, the MENA FATF, the IMF, the World Bank, these are all institutions that are committed to the principles of financial information and financial action to understand and disrupt the threats we face. So these are large accomplishments in building infrastructure and demonstrating commitment, global commitment, to combating crime, combating global security threats through a partnership with the financial system to understand the problems, the threats we face, and to take action against them. That's the mission. It's a great mission. Unfortunately, when you look at our current environment and the challenges of implementing that mission, we are facing incredible challenges and frustrations across all stakeholders in this mission of combating financial crime through financial information and financial action. And those challenges center around questions, ultimately, of financial integrity, cultural commitment, and corporate governance inside and outside of government to the mission that I'm trying to describe. What are these challenges? What is the current environment? I've been very fortunate to have a roundtable discussion this afternoon, a set of discussions at Phoenicia Bank yesterday, historically conversations here in Lebanon and elsewhere. And increasing frustration has been evident at home in the United States, abroad here in Lebanon and other markets, about the complexities of the system and growing doubts about whether it's working. So despite this infrastructure and political commitment of financial information and action, the reality on the ground doesn't look nearly as pretty. What does it look like? We've got bank enforcement actions emanating from the United States that are unprecedented in the field of money laundering, terrorism finance, financial integrity. $8.9 billion with BNP, $2 billion in change with JP Morgan Chase, HSBC, Standard Chartered, Bank of America, Wachovia, now Wells Fargo. The list goes on and on. The United States authorities have sanctioned over $15 billion of penalties in the last 3 years alone from U.S. and global banks for fundamental breakdowns in compliance with the requirements and the expectations that are needed to advance the mission that I opened with. So there's real frustration from the authorities in the United States about what is seen as a fundamental breakdown. From industry, there's huge frustration that they're being prosecuted with these fines, with these enforcement actions, without any clarity over what's next, what the expectations are, over even what the purpose is anymore, and growing doubts about the effectiveness of the information that they are trying to produce for these AML regimes. There's frustration from policymakers, my old office, and my colleagues around the world, about the lack of effective results from the mission that I've described. When you look around the world at these investments that we've made in institutions across the financial system and the private sector, compliance systems, personnel, training, IT systems, when you look at the investments we've made in political capital and policy to construct standards, global standards, to set up assessment processes, to build out infrastructure globally, to assess jurisdictional compliance with these standards, the results haven't been there. What are these results? The purpose of these actions is to disrupt financial crime. There's a global security component to that, which is disrupting the effectiveness of groups like Al-Qaeda, proliferation networks that support violations of the NPT treaty. Those results have been effective in certain channels. But the underlying bulk of illicit activity, drugs, fraud, extortion, kidnapping, the 99% of crime that is conducted for profit, we're not doing very well at that. The latest studies, the United Nations Office of Drug Control Policy released a report in 2009, as the last published assessment, of what it estimated is the size of the problem of illicit finance running through our financial system globally. That number, any sense of what that number is? They peg it around $2 trillion a year. I think that's probably a little low, but they peg it around $2 trillion a year. And again, these are estimates, right? Because bad guys don't give us balance sheets and accounting statements, so we don't know how big the problem is. In the United States alone, the estimates exceed $500 billion. A $16 trillion economy, $500 billion of illicit finance running through it. Maybe that's an acceptable ratio. It's a lot of money. It's a lot of money. In this information and action campaign, one of the key metrics of success is how much of that money do we get? Do we take away from bad guys? Do we investigate, prosecute, confiscate, repatriate to take the profit out of crime? How much do we actually get back? Out of that $2 trillion globally, $500 billion in the US. The answer is less than 0.1%. So does crime pay? That's frustrating, right? We don't prosecute, we don't confiscate, we don't investigate. And so there are real questions about the effectiveness of this system for the beneficiaries of the system, law enforcement primarily. And so here's this mission, this incredible mission. Here's this commitment, the infrastructure, the investments that have been made. And yet here are these challenges across industry, regulators, law enforcement, at home and abroad. Why is this? How did we get here? Is it worth saving? How do we save it? Let me start with why I think we have these challenges, why we think we have these problems. If you look at the jurisdictional implementation of requirements to make this system work, the complexity of this is at odds with the simplicity of the mission. We're going to get financial information, we're going to find out from that information where the bad money is, and then we're going to go find the guys that do that, we're going to put them in jail, and we're going to take away their money. Pretty simple mission, great. What do we need to make that work? Well, we have to start with understanding where the information is in a financial system that is now more complicated than ever before. So we could say banks, sure it's banks, but what else is it? If you go up the ladder and down the ladder, it gets complicated in a hurry. You go up the ladder, you get into sophisticated capital markets that forget about illicit finance. We've all learned since 2008 there's no shame in admitting that people with 10 PhDs after their name can't agree on what legitimate finance looks like. It's a very complicated capital market globally. You go down the ladder to cash-based economies, transaction-driven financial services, and our ability to understand what's happening in those economies that are critical to vulnerable populations around the world and in the United States is minimal. We don't have oversight into that. We don't have examiners, regulators, supervisors that have any real capacity to look at everything from cash-driven bodegas to large exchange houses to money service businesses. That's the financial system challenge, and distinguishing across those different industries in a way that we can make sense of is increasingly challenging. When I taught this course, this course that Asim was very graciously outlining in the introduction, I would begin by outlining the problem in a financial system that I would map out on a whiteboard. And by the time I was done, there were so many boxes people couldn't follow it. That's just the beginning. Because then the next step, once we understand who's in that system, where the information is and where we want to have action, is to move to who's in charge of making sure that whatever rules we pass over here are going to be implemented. Who does that? Regulators, examiners, supervisors. Okay, sounds good. Let's examine that a little more closely. In the banking space alone, banking regulators are overwhelmed with the complexity of financial instruments. 2008, again, is a case in point. In the United States, we have 54 banking agencies. 54. 50 states and 4 federal ones. FDIC, NCUA, OCC, Fed. You've probably heard of these names. They have overlapping jurisdiction, and that's just the beginning, because that's just the banks and the bank holding companies. In the consolidation that preceded and has post-dated the crisis, those bank holding companies often hold trading firms, investment banks, broker-dealers, futures commission merchants, trading derivatives, securities, over-the-counter, on exchanges. Who regulates that market? In the United States, it's the SEC, but the SEC can't do it because it doesn't have the resources, so it has an SRO, a self-regulatory organization called FINRA. FINRA struggles to extend the net of supervision over all of the small broker-dealers and futures commission merchants that we want to facilitate business and competitiveness for. Again, with sophisticated products for legitimate finance before we get to anything illicit. You go down the system, who's in charge of the cash-based, the occasional transactions, the sort of informal financial system? Who's in charge of that? Who regulates exchange houses? Who regulates money transmitters, money service businesses? The answer is often no one. In the United States, as in most countries, that's an issue that we don't functionally regulate, so we kick it to the tax authorities, the IRS. Most other countries do the same thing. They have a customs authority or some other authority who's looking at this. I say all this because I want you to appreciate why we're not good at this. This is the financial system, the reality of the financial system, the complexity of it, where all this information is, and we're trying to find bad guys. These are the supervisors that are largely overwhelmed with the challenges of these complexities before we even get to bad money and understanding good money. And we haven't even gotten to the reason why we do this yet. We don't do this to pass rules so that we can then find banks. We do this because we're trying to get information in the hands of law enforcement. So let's talk about law enforcement for a minute. You guys, I'm sure, all watch law enforcement TV shows or see law enforcement movies, great action movies. Is your image of a special agent, a successful law enforcement officer, the image of a person who goes into a windowless room with boxes of documents and starts looking through these documents to connect the dots? This is what financial investigations entail. Accounting, banking, financial forensic expertise. It's not about chasing bad guys, doing takedowns, shooting guns, doing stakeouts, all the things that law enforcement becomes law enforcement for. We have a massive skill set disconnect between what it takes to run a sophisticated financial investigation and the law enforcement communities that are asked to do the job. It's a global challenge. Finally, national security. The post-9/11 response from the United States and the global response in support of that was to arm national security authorities around the world with financial information so that it's not just about assisting law enforcement, it's about bringing intelligence into the picture. And yet, I've been in so many conversations with countries around the world where their national security authorities aren't even aware that they have financial information at their disposal to help them understand the problems that they're facing, the threats that they're facing. So this is the challenge of why this is hard, why we're not as good at this as we need to be, or as good as we could be. As I used to say to my team at Treasury, when we would interview to bring people on, I would say, know who the perfect candidate for this job is. The fictional perfect candidate. And for you students thinking about how to get involved in this space, people would say, do you want lawyers? Do you want accountants? Do you want regional specialists, international studies specialists, bankers? What do you want? And I would say, well, this is the problem. You need to have somebody who understands the financial system. That again, the best central bank governors in the world have disputes over how to define the financial system. You need people who understand what is the right regulatory construct with limited resources to oversee that. You need people who understand what a financial investigation requires and what criminal organizations, terrorist organizations, proliferation networks, corrupt regimes do to launder their money. You need somebody who understands that. And then you need somebody who understands how every other country in the world does it. Because these organizations all operate in a global economy, just like legitimate businesses. And you need all of those things to happen on one team, ideally in one person. Well, good luck, right? Good luck. This is the challenge of the mission. So it's a simple concept, and it's a very compelling concept. And in practice, it's really hard. So I'm going to give you a dose of optimism. That's an explanation as to why why this is difficult. There are ways that we can get better at this. There are ways we can get better at this. Some of these steps will be long-term and will require political commitments that have not been made from every country around the world on financial reform. That's not my topic. There's an endless discussion happening in Washington, and I'm sure in other circles, about the post-financial crisis and the state of global financial reform. The G20 statements that come out every year, every quarter, track this, and if you take a step back from it, I'm not sure exactly what the progress has been. But in any event, there clearly needs to be some momentum put into financial governance so that we have more effective oversight and understanding of the financial system. But I think jurisdictionally, there are steps that can be taken that are more pragmatic. And if you go through those stakeholders that I just walked through in describing the different components of this mission, there are things that need to be done in each of these stakeholders, and there are things that need to be done across these stakeholders. The common unifying theme is first going back to basics, going back to the mission. What are we trying to do, and what is my role in advancing that mission? We need to start asking that question again. So for financial institutions, if you ask that question, what you find is an interesting debate. It seems like it should be asked and answered. Well, I'm a financial institution, I have the financial information, you need it. You want me to take financial action against specific targets? Tell me who they are and I'll do it. Sounds simple. Wait a minute. Is it that simple? We had a very interesting discussion in the roundtable this afternoon that mirrors a discussion that we're having back home in the United States. Bankers who say, look, I am 100% committed to helping you find these bad guys. I don't want them in my bank any more than you do. So just tell me where to look and I'll find them and I'll give you what you need. And I don't think there's really any question about that commitment. It's the how in which you have a huge debate. Is the how a checkbox approach where the industry expects government to come to it with a list of specific steps, actions, or requests that the industry can look at, check them off, get the information if it's there, and send it to their intended recipient? That's one approach, and there are people who think that's the right approach, and there's certainly a lot of institutions that approach compliance in that way. And then there's the so-called risk-based approach. This is a phrase that has been abused ad nauseum over the past 12 years. But the risk-based approach, what it means is you can't check a box. You can't automate this. You can't standardize it because it requires judgment. First, over what is the risk, and second, what is the right way to manage that risk. And then it requires consultation over whether those judgments are shared across different stakeholders. That's a lot more work. I can tell you globally there was a debate about this for several years in concept, and ultimately it was decided a risk-based approach is essential because bad guys change and the financial system changes. Now, the financial system is going to change and bad guys change. We can't just create a set of check boxes and have compliance run it, put it through some sophisticated machines, do some deconfliction, get the right answer, and mail it in. We can't do that. It has to require attentive risk management. Ask yourself this. If you're running risk management models in credit risk or an operational risk, you've got to stay on top of it. The same is true in illicit finance. So, what's expected of me as a financial institution? To manage risk. Not to check a box, not to respond to law enforcement, to manage risk of what? Of an expanding range of illicit financing activity. Used to be drugs, then it was drugs and fraud, now it's drugs, fraud, and all serious crime. Also includes tax evasion, terrorism finance, proliferation finance. Having people who understand what these threats are and what it looks like in your institution is essential. It's a little more complicated than I think people appreciate it. Supervisory. In addition to having clear competence across the different parts of the financial sector, which is lacking in most countries, it's having a clear sense of the prioritization of illicit finance in a supervisory culture that doesn't look at illicit finance as a priority. Just like you don't join the FBI to do corporate due diligence, you don't join the Fed to do AML supervision. You join the Fed to do safety and soundness, to do the big rides, to do the big stuff, stability. Basel. Well, it's just as important to understand and manage illicit financing risk. So there's a cultural change that is happening inside of the regulators. In the law enforcement environment, I've already explained, we need to have more accountants, more financial forensic expertise, and analysts to complement the special agents that are in charge of the street. That needs to happen. So these are not rocket science steps, but they're important steps. They'll take some time. And then most importantly, there needs to be an ownership of the mission. And this is where the corporate governance becomes important. These different responsibilities I've explained in the stakeholders that have to execute these responsibilities have been marginalized for too long. Not because people don't care, but because it's not the main mission of the agencies involved. Law enforcement is worried, as they should be, about predicate offenses, crime, murder on the streets. They have to prioritize that. Supervisors have to prioritize whether or not we've got institutions that are running away with depositors' money, whether or not we're going to have a bank tomorrow, the liquidity, the safety, the soundness issues. Those continue to be priorities. That's fine. Should be. But there needs to be more attentive, consistent investment in these illicit finance challenges. I'll give you an example on the financial institution side, and then I'll turn to some concluding remarks. But on the financial institution side, I had this I had this analogy in a meeting and a discussion yesterday that some found helpful about the challenge of corporate governance with compliance dealing with illicit finance. I've had the fortune of being able to see this from the government side for years, and now that I've been on the commercial side for a year and a half, to see it on the commercial side as well. And I can tell you that one of the reasons why this has become difficult is that you have financial institutions who have received the message that this is important, and so they're investing more and more in the space. They're hiring compliance officers, they're hiring IT systems, but they're not still managing their risk in a way that's consistent with supervisory expectations or law enforcement or whoever the authorities may be. And I have been witness to and a participant in so many of these conversations at Treasury, from U.S. banks, from foreign regulators, from foreign finance ministries. And it's occurred to me over time that so much of this is happening because the way that we think about compliance in the industry, and frankly within finance ministries, has been siloed. It's been siloed. And ultimately, the only way you manage risk is if those compliance assets, resources, expertise becomes integrated. No. I don't want to go to the party room. I don't like those guys. They don't understand what I'm doing. They've got an issue. They have to report to me. And if I don't like it, I'm going to say no. So my first job in New York coming out of school was as an attorney, and my nickname inside of the startup was called Deal Breaker. Deal Breaker. It was not a term of affection. I learned very quickly that if you wanted to manage the risk, you had to be let into the party. And you're not going to be let in the party if you're a deal breaker. You've got to work with the business to help them close the deal and manage the risk. If business does not have confidence that you can manage the risk and that you will try to manage the risk, they won't call you to the party. That's the lesson for compliance. Business guys, if you don't invite them to the party, then they will kneecap you in this environment. They'll kneecap you after you're exposed, and that's going to be a lot harder to unwind, and you're going to put your institution at risk. So forget the party room and the card room. Create an integrated culture of compliance across the lines of business from the top down. Let your compliance guys understand that they are responsible for growing and managing the risks in the business, growing the business and managing the risks in it as much as they are for saying no. Let the business guys understand that they have to manage the institution's risk in addition to grow the business. And then you're going to have the beginning of a corporate governance system that can work in this environment. There are similar stories that you could tell across other stakeholders that have similar challenges: regulatory, supervisory, investigative, analytic, intelligence, policy. Everyone has work to do. It's not in Lebanon, it's not in the United States, it's global. But in looking at the corporate governance challenge for the market, for financial institutions, this is the challenge. It's a cultural one. It's not about box ticking, it's not about buying more systems, it's not about hiring more people. It's about understanding and committing to the mission of managing risk of illicit finance. Once you have that commitment, there's 3 other steps. Execute it, document it and execute it. Share what you're doing with the other stakeholders who are essential to your business. That means your correspondents for sure. It also means authorities in your jurisdiction and in foreign jurisdictions that are looking at your correspondence. Why? Because in a risk-based approach, it's about judgment. It's not box ticking. Here's my judgment. I see my risk this way. I see my risk management program tailored this way to manage the risk. And if you have any questions, please call me. That's how you manage this risk, in consultation with the others that you're doing business with. That's essential. So that walks you through a little bit of the mission, the current environment, why the environment hasn't produced the results that we wanted, and what we should be doing or thinking about to change our behavior so that we get to the results that we want. The last piece of this is in managing relationships, because the current environment is one in which not everyone's going to act rationally for some time to come. The security risks in the region and globally are continuing to grow and become more complicated. The financial governance issues are as challenging as ever before. So even if you have all the right set of thoughts, the right program, and the right execution, you've got to make others understand what you're doing if you want to secure the relationships that you rely on. So there has to be constant dialogue. This is a terrific event, and it's been a great week already in helping to bridge, hopefully, some of the misunderstandings between the United States and Lebanon, between our banks and your banks, between our authorities and yours, and across authorities' interests in Lebanon. I can tell you right now, we have these debates chronically in the United States right now. I chaired the most hostile discussion among financial institutions last Friday that I have sat in on a long time about our customer due diligence rule. And it was our biggest firms and our smallest firms that were extremely animated about differences of view on roles, responsibilities, risk, and risk management. I've been in several of those meetings with the regulators and law enforcement as well. It's not pretty. The good news is that they're talking about it because they realize it's not working, and they're going to have to communicate more effectively what a shared understanding of risk is, what a shared understanding of effective risk management looks like, so that there's confidence that as agencies and industries start to take steps, that others aren't going to second guess them. That has to happen in other markets. And then it has to happen between markets. So this is a conversation that I hope to continue. It's a great introduction. It's not an introduction to Lebanon. I'm thrilled it's my 4th time here. But it's a conversation that has to continue if you want to secure the relationships that we need for Lebanon, for the United States, for the financial markets, and ultimately for global security. We've got to get better at this. There's a game plan, there's a playbook on how to do it. We have to be committed to it, but we have to understand it first. So this is about understanding it, and I hope that we can continue the conversation with follow-on events. I'll be here certainly for the next couple of days, but I would be delighted to return at any point to the university. I've enjoyed looking at the campus just briefly this afternoon. I'm going to come back in my next life, I've told people. I'm going to come back Lebanese for a lot of reasons. One, I eat better here than anywhere in the world. You guys feed me better than anyone I've ever visited. You are the most hospitable hosts imaginable. Every time I leave Lebanon, I leave with a dozen more close friends. I've found out since Mohammed introduced me to Lebanon in 2002 that there are probably more Lebanese in America than anywhere else in the world, and everybody outside of Lebanon is like the people in Lebanon, the most hospitable people you'll ever meet. So you're pushing out an open door anytime that you ask me to come back to Lebanon. The trick is in allowing the rest of America to understand how great Lebanon is. We're going to get there, but we've got to keep talking. So anyway, thank you for your time. I'm happy to take questions. I'm usually more of a discussion guy and less of a lecture format. So if you have questions or we want to open it up, I'm certainly at your disposal to do that. Thank you again. Please, yeah. So questions?
I have a question, Chip.
Please, Mohammed.
I hope this will encourage other people to raise their own questions as well. You definitely have some good dose of experience when it comes to Lebanese anti-money laundering, tax financing, laws, regulations, implementation, and so forth. And as you mentioned briefly, though, that the region is witness more challenges when it comes to terrorist financing, especially with the new coalition on fighting ISIS or ISIL, or whatever you call it. And I expect the pressure will be immense on not only these banks, but other banks, but more specifically regional banks in the region. But I'm more concerned about our banking sector. So what would be your advice or what are the challenges or the dangers or the, if you name one or two risks that our banks may be facing, and what is your recommendation to deal with those problems?
Thank you, Mohammed. And before answering, I should just say I meant to provide some more information on this, and given my penchant for talking, perhaps it's good that I didn't, because I could talk about Mohammed all day. What this man has done for Lebanon is impossible to overstate. But his leadership at FATF delivered Lebanon from a blacklist in record time against the highest doubts of the international community in 2002, 2003. Through the construction of the SIC, which I will tell you, having been to FIUs around the world, financial intelligence units, is a model on how an FIU should work. He also was the founding father of the regional organization, the MENA FATF, that is responsible for assessing and publishing assessments on jurisdictional compliance with global standards on all the issues I just covered. So a tremendous asset to Lebanon, a tremendous ambassador for Lebanon, and a dear friend, and a terrific fan, I should say. So thank you, Mohammed. He also, like Lebanese, has relatives all over the world. So his sister Hadio, I'm very proud to say, was at my wedding in Australia. I'm married to an Australian, and of course there were Lebanese there. So anyway, that's Dr. Mohammed Basiri. Mohammed, of course, great question. Look, the ISIS threat is going to do a couple of things immediately. One is it's going to make everyone in the United States nervous about the region, again, from a financial perspective. And it's going to immediately raise the question of how do I manage risk? What does it look like, to your point? What should I look for? In that environment, if local institutions, Lebanese institutions in the region are not proactive on this, you have the possibility that correspondents are just going to cut and run. They're just going to de-risk and say, it's just one more issue to manage. I don't know how to manage it. I'm not doing this business anymore. I'm getting out. And to get out ahead of that, you certainly start with the ISIS threat, which there's been minimal information about. But what has been divulged and does have consequence for financial institutions is that their financing is coming overwhelmingly from managing the territory that they have. So you've got oil and you've got local economies. They're taxing, they're extorting, they're smuggling oil, and they're selling oil. It's generating cash proceeds. What are they doing with the cash proceeds? This is the big question. They're getting the cash out, I'm sure. Are they putting it in, is the question. In a cash-intensive region, this becomes a complicated question. If you say no to cash, the region doesn't work. If you say no to cash in the United States doesn't work. You can't say no to cash. You have to look for something more discriminatory. I know that the authorities in the U.S. are trying to figure out how to get more information into the market on how to disaggregate cash-based risk, but clearly volumes are going to be key. Where you see an uptick in big volumes, there should be questions. Again, these controls shouldn't be that different from what you do already in looking at risk in cash-based businesses. Where cash is coming in, what is the account? What is the business behind the account? What are the anticipated volumes with that business? Is the transactional activity consistent with those expectations? If not, investigate. If no answers, close it down. If you get the answers, communicate those answers to your correspondent. Make sure they're aware of it. Outside the cash, it's hard to say. There's been, you all know this, tremendous scrutiny on charitable organizations being abused, misused, co-opted by terrorist organizations in the past. It's a very complicated question, as I'm sure you know. The fact is that terrorist organizations in the U.S. experience are larger than just militant organizations. They have charitable sectors, they have political sectors, they have media sectors. And how you attempt to manage legitimate charitable interest, charitable need in a region that's creating those needs through the activities of ISIS, and at the same time manage concerns about abuse by terrorist organizations is extremely challenging. Again, proactive engagement is key. Telling a correspondent ahead of time, we're concerned about this risk. Sure, cash is one element. Another element is that we're going to see a lot more NGOs in the region. There are over 1 million Syrian refugees in Lebanon. They're going to need assistance. There are going to be NGOs providing cash to service that assistance. There's going to be more refugees in the wake of the ISIS activities all over the region. It's going to be an uptick in NGO activity and cash-based transactions in support of that. That's to be expected, but it needs to be communicated, it needs to be managed, it needs to be overseen in a way that gives your correspondent, first, an awareness that just because there's more cash and more NGOs doesn't mean there's a bigger problem. But it does mean that it's going to require attentiveness and risk management. So this is the issue, this is what we're doing about it. Imagining those risks, having clear understanding of where funds are going and for whose benefit. The terrorism financing challenge, I know you know this, Mohammed, is a little bit different than the money laundering one where you're looking at source of funds, you're looking at the purpose of the funding, right? Where is it going and what is it supporting? And that, in those instances, having understanding not only whether cash deposits that may be coming from smuggled and sold oil on the black market is ISIS related, having a sense of where it's going is also important. Is this going to a legitimate business interest? Does this make sense? Is it a vendor account? Is it a customer account for your customer? Is the wire activity or the transaction activity consistent with that? If not, why not? Again, back to basic monitoring, back to understanding your customer, back to making sure that the activity in the account matches the expectations you have for that kind of business. Risk-based approach is hard. But I think even just being able to articulate what you're describing, Mohammed, and being out ahead of it with your correspondents and with the authorities immediately demonstrates a seriousness of commitment, an understanding of the complexity of the issue, and the development or application of controls to address these risks. If you do that, you're going to be ahead of the curve. There's no guarantees, you know. People are still going to walk away from the region because they're going to be afraid that they can't manage the risk or they can't manage their regulators' expectation of managing the risk. But getting out ahead of it and playing these risks proactively is definitely the way to go. You're not going to be able to hide from it. The whole world is looking at ISIS at the moment, and it's going to put a spotlight again on the underlying systems of risk management across illicit finance in the region. So having your programs ready, your risk assessments ready, and then having those tailored to deal with some of these applications is going to be important. Please, what?
The issue of transparency of NGOs. We deal very openly with the United Nations, Rami Makhzoumi Foundation. But we've created the transparency system that basically at any time you can step in and look at our books, because that's the way it should be done. Unfortunately, there are 11 alone, thousands of NGOs that some of it is transparent and some of it is less transparent. I'm not going to say, it's illegal, it's less transparent. With all what we're trying to do as the coalition of the willing, in fighting with the ISIS, we've created a situation that when you ask the governments, the source of that income, through collecting taxes, money, whatever you want to call it, the bottom line is the source of the oil and gas. My question to the coalition, why don't you go and bomb these oil fields and these resources so that we can put an end to it? So far, I didn't get any response that will be positive or at least in that direction.
Yeah. That's a great comment, and that's reminding me of a fundamental principle that I should have articulated up front. But the fact is that this financial strategy, whether it's to combat terrorism finance or to combat money laundering and organized crime, it's one component of a broader strategy, and it won't work in isolation. I completely agree. Having the financial information, the financial disruption, the financial isolation, exclusion, and the seizure and freezing of accounts and assets, et cetera, associated with a counterterrorist financing campaign is one part of a counterterrorism strategy. It has to be married with other parts. I completely agree with you that there are other elements of that strategy that have to be articulated and have to be executed. What I've heard back home that I am very happy to be reading, and I'm not sure where we are on this, and then sitting where I sit now, I'm not going to know, is that the convoys that are carrying the oil are easily discernible from imagery that we can get. And if you've got that intelligence to target strikes, then we should be using it. So every indication that I'm looking at is that those targets are going to be open. Of course, a huge challenge in this, and we've learned this from the campaigns in Afghanistan and Pakistan and Yemen, is that the intelligence is critical. If you screw up the intelligence, you create more enemies than friends. We've seen that movie, and it's horrible. So you've got to get the intelligence right. The intelligence picture on the ground is difficult. In Iraq, since our withdrawal, we haven't had the same intelligence. Obviously, the developments in Iraq have been difficult for a lot of countries. In Syria, it's worse. The intelligence picture there is more complicated. And this is where the coalition of the willing is essential, because the U.S. isn't going to have the best information on the ground, but other countries here will. And getting access to that as to where should we be hitting, and then having execution of that through U.S. capabilities or support is key. But we can't do it from the U.S. from inception execution, because we're missing a lot of the information that the region is going to know much more than we. If we get that information, I hope we are ready to execute. I think you're right. I hope others are willing to support that. And then ultimately the question of dislodgement is the question that everybody back home is asking. Is this a war that U.S. troops are expected to fight? Is this a war that local countries are expected to fight? Do they do it in concert? If so, how? How do you deal with Iran and the JVOA that's under discussion now? What happens if we accelerate a commitment here with Russian support, given what's happening in Ukraine? The spiderweb, it gets inordinately complicated very quickly. But the quick answer is we can't do the financial piece alone. There does need to be, I completely agree, a militant aspect of this, but it requires clarity over what role we're playing, what role others are playing. And I know people are working very hard to try to get there, but obviously the longer we wait, the harder it's going to be.
Can I say? Thank you, Chip. I mean, it's not my job to thank you. But I just want to make one wish to AEB. Okay, to AEB. You know, being an AEB graduate, class 74, I wish AEB could hold more of such a function here. Okay? And we don't have to wait for somebody like Chip to come over from the US or somewhere else. But there are issues, current issues in Lebanon, which and please, I don't want to sound aggressive to AEB. I mean, I'm saying out of my love and loyalty to AEB. I find AEB, and the rest of the schools, not only AEB, but I'm more concerned about AEB, because I love AEB, to be a little distant from the business world. I can give you just a few examples where I'm really...
He's the dean.
You're the dean? Oh, well. Okay. Well, to the dean is to the board, to the whoever decides on those issues. We had cases like LCB Bank, the Lebanese Canadian Bank. We had famous case, which is Al Medina Bank. Lebanon was on the blacklist, as Chip mentioned. Lebanon got off the list. Okay. We never heard any interest on your part to call anybody at Central Bank or somewhere else. Okay. Just to invite the speaker to tell your student, explain to your student instead of your student.
صور الاكل كمان صوروا اللواء هو عم ياكل